$3.8 billion. Now, that is not some random market move. It's a documented, pre-announced event that's about to hit the silver market. And you know what? The biggest institutions in the world are counting on you misunderstanding what it really is. We're about to break down one of the most significant and deliberately confusing events in precious metals all year.
So what is this thing, really? Is it a genuine sign of weakness in silver? A reason you should be worried? Or is it a manufactured, temporary distortion that's designed specifically to shake you out of your positions? Well, by the end of this explainer, you're going to know exactly how to see what's coming, because we are going to separate the signal from the noise.
Welcome to Bullion Signal. Our entire mission is to give you the kind of financial intelligence that you just won't find in the mainstream headlines. We dig into events exactly like this one to help you find that true signal in all the noise of global finance. If that's what you're looking for, go ahead and subscribe so you don't miss what's next.
Okay, so an event like this, it doesn't just happen in a vacuum, right? To really get what's at stake here, we first have to understand the unstable macro landscape we're all living in. Because it's this bigger picture, this context, that gives the coming volatility its real meaning. The context is absolutely everything.
I mean, just think about the pressures building up in the system right now. Inflation, it's still stubbornly high, eating away at your savings. Global debt, it's at record levels, making everything more fragile. Interest rates, well, the central banks are trapped, creating total uncertainty. And all of this is playing out on a backdrop of rising geopolitical tension. This is the environment we're in.
So, to make sense of this, we've broken it all down into a clear four-pillar framework. First, we're going to expose the paper market illusion. Then, we'll ground ourselves in the physical market reality. After that, we'll look at the geopolitical chokehold on supply. And finally, we'll cover the unstoppable force of structural industrial demand. This is our roadmap, and it's going to give us the clarity we need. All right, let's jump right into Pillar 1, the paper market illusion. This is where all the action is going to be over the next week or so. We have to understand the exact mechanics of this $3.8 billion event to see why it isn't at all what it looks like on the surface. The key thing to get here is this idea of mechanical selling. Think about what that means. This isn't some fund manager deciding, I think silver is overvalued. Nope, this is forced selling. The Bloomberg Commodity Index is rebalancing, and that forces huge funds, we're talking pension funds, to sell silver futures to match the index, whether they want to or not. It's an algorithm, not an opinion. And here's the thing, this isn't a secret. The dates are known by everyone in advance. The selling starts January 8th and it ends on January 14th. This is a finite, totally predictable window of artificial pressure on the price. The key word there is finite. The real forces driving silver don't stop on the 14th, but this mechanical selling does. So, if you're a big bank and you know these dates, what's the playbook? Well, it's pretty simple. Before the selling starts, you build a massive short position. Then, when that predictable selling kicks in, you pile on top of it. You amplify the move down, deliberately triggering the stop losses of smaller traders. This creates a cascade of panic selling, and that lets you buy back your shorts at a huge discount from the very people selling in fear. You know, one of the sources we analyzed for this just cuts right to the chase. It says, "This is wealth transfer in plain sight." And that's such a powerful way to put it. It reframes this whole thing. It's not a market correction. It's a pre-planned move where the big players profit directly from the confusion and panic of everyone else. Okay, so that's the paper game. Now let's get into Pillar 2, because this is where things get really interesting. We're leaving the world of digital contracts, and we're stepping into the physical market reality. This is where we see this huge disconnect between the price on a screen and the actual value of metal in your hand. It is so important to get this difference. The price you see on TV, that's the paper market. It's just contracts, and as we just saw, it can be pushed around. But the price to actually get the metal, to hold it, that's the physical market. And the best way to see what's really going on there is by looking at the premiums dealers are charging over that spot price. So what's the physical market telling us right now? Well, the signs are everywhere if you know where to look. Dealer premiums for things like Silver Eagles are still really high. A lot of products are backordered.
And trying to get immediate delivery on a big 1,000-ounce bar at spot price? Forget about it. If this were a real sell-off, premiums would be collapsing. But the exact opposite has happened. And if you need more proof, just look at what happened last Friday. We saw something that the textbooks say should not happen. The US dollar went up, 10-year yields went up. Normally, that's terrible for precious metals. But silver went up anyway. Why? Because the physical demand is so overwhelming that it's just overpowering those old correlations. The physical market is screaming for supply.
And this makes me wonder, I would love to hear from you all directly on this. Have you experienced this disconnect yourself when you've tried to buy physical silver? Are you seeing the high premiums or the long delays? Let us know in the comments. It really helps our whole community get a real-time pulse on what's going on out there.
Look, if there's one thing you remember from this section, make it this. The physical premium is the most honest signal in the market. As this paper sell-off happens, just watch the premiums. If they stay high or if they even go up while the spot price is falling, that is your confirmation. That's the physical market telling you it rejects the paper price. It is the ultimate test.
So we've covered the paper game versus the physical reality, and that's a perfect place to pause for part 1. When we come back, we are going to zoom out and look at the massive, long-term forces that are really driving this whole thing, the geopolitics and the unstoppable industrial demand for silver.
All right, welcome back to part 2. At Bullion Signal, our whole job is finding the signal in the noise, so let's jump right back into it.
Okay, a real quick recap of part 1. A predictable $3.8 billion mechanical sell-off is about to happen. It's temporary, it's artificial, and banks will try to exploit it to create panic. But the physical market is already showing signs of being incredibly tight. So now that we're all on the same page, let's get to the 2 biggest long-term drivers.
And that brings us to Pillar 3, the geopolitical chokehold. You see, the paper market stuff we just talked about, that's just temporary noise. This is the long game. This is the reality that's fundamentally changing the silver supply chain. And China's actions here, well, they change everything.
You really don't need me to say much here. This chart says it all. China controls around 70% of the world's refined silver. We're talking about the high-purity metal that is essential for all of our modern technology. That's not just market share, folks. That is a strategic chokehold on a critical resource that Western industries simply cannot function without.
And guess what? That chokehold just got a lot tighter. On January 1st, new export controls went into effect. Now, every single shipment of that high-purity silver needs a specific government license to leave the country. This means Beijing can delay or just plain deny shipments whenever they want. They can basically turn the tap on or off. And that turns silver into a powerful geopolitical weapon. So you have geopolitics squeezing the supply. And that brings us to our powerful final pillar, which is all about demand. While supply is being constrained, the demand from key industries is becoming totally non-negotiable. Silver isn't just a precious metal anymore. It is the unprintable, irreplaceable metal of the future. And this demand curve is only pointed one way.
I mean, just think about the technology that we all rely on every single day. Every solar panel, every EV, so many AI chips. They all depend on it. The smartphone in your pocket has it. And critical defense systems, like missile guidance systems, rely on its unique properties. For these things, there are no good substitutes. This is baked-in industrial consumption. So when you put it all together, what do you get? You get this profound structural imbalance. On the supply side, we've had deficits for years, and mining production is basically flat. And on the demand side, industrial users have moved from a just-in-time inventory model to a just-in-case strategy. They are actively stockpiling physical silver right now, which is pulling even more metal out of an already tight market. Okay, so that's the big picture, the 4 pillars. The big question now is, what do you do with this information? So we've put together a strategic navigation plan. And let me be clear, this is a framework for thinking. This is not financial advice. The goal here is to give you a mental model to interpret events as they happen, without emotion getting in the way. Let's just walk through this. It's a simple if-then way of thinking. So, if the spot price drops sharply in the next week, the key signal to watch is physical premiums. If those premiums rise, that confirms the disconnect. If you see volatility spikes and the media blames it on everything but this rebalance, you know it's just noise. And after January 14th, if dealers are still reporting tightness, that confirms the fundamental squeeze is real.
So this all boils down to 5 pretty simple rules for the road ahead. 1, don't try to day trade this event. You're just going to get burned. 2, if you believe in the long-term thesis, consider any artificial weakness an opportunity. 3, as we've said, watch the premiums. 4, ignore the media noise. And number 5, and this is maybe the most important, think in months and years, not in minutes. The growing Bullion Signal community gets that patience is the ultimate strategy here.
And that brings me to my last question for you. When you think about your own strategy, which of these signals or rules really resonates the most? Is it watching the premiums? Is it ignoring the noise? Share your perspective on risk management in the comments below. It helps everyone here refine their own approach. All right, let's bring this all home and close the loop. Remember where we started this whole explainer? We started with one big question about that $3.8 billion event. Is it a real signal or is it just noise? Well, after going through all 4 pillars, the answer is pretty clear, isn't it? The $3.8 billion sell-off is a temporary mechanical distortion. It's noise. The true signal, the one that's going to matter for months and years to come, is the permanent physical shortage that's being driven by geopolitics and industrial demand. And if you walk away with just one single idea from all of this, let it be this simple truth. When paper meets physical, physical always wins. It might take time, but eventually the reality of supply and demand for the actual metal will always overwhelm any temporary games being played in the paper markets. So let me just leave you with this final thought. The next few weeks, they are going to be a test of your conviction. Remember, the banks built these massive short positions. They need you to panic sell. They need you to get scared and give up your position. Your patience is the one move they just can't counter. And of course, we have to end with our standard disclaimer. This content is for informational and educational purposes only. It is not investment advice. Please do your own research and always consult with a qualified financial professional. Thanks for joining us at Bullion Signal. Stay sharp, and we'll see you in the next one.